Hey everybody, welcome back to the Thursday evening Financial Thing live stream. Hope you are all having a great week. Still here in Orlando. Very balmy, something like 45 million degrees here. I don't know how much that is in Celsius. But yeah, what are we going to do this week? We're going to look at some peer-to-peer lending news. Again, pretty quiet week, not really much happening within the space. Just continues to, be the strong players in the business just continue to stay solid, and the rest of the companies quiet. So we're going to look at a little bit of news, what's going on. We take a look at the Trading 212 portfolio that was pretty down last week with the oil, and then has again bounced back a little bit, but still sitting on the sidelines mainly in cash because I am not convinced about where the stock market is heading. So looking for some opportunities in that department. And we're going to talk about some cryptocurrency news. And we're going to look at Kuflink accounts. Obviously late being filed, but I have been able to take a look at the Kuflink accounts. And we're going to go through there and see how Kuflink is looking. Now, this is for accounts ending June 2020, so obviously not including mid half of 2020 to 2021, but we don't have that yet. We're looking at to June 2020. So we're going to go through that, and we're going to take a look at Bitcoin and see, why is Bitcoin flourishing at the moment, and where that is heading, and why it's heading in that direction, why I think it's heading in that direction. And if you haven't had a chance to look at the cryptocurrency guide that I put up on the Financial Thing website, it's right there on the front page if you're interested, or if you're a skeptic of cryptocurrency, take a read of that article, educate, get informed, and see, what is it about cryptocurrency you might really want to pay attention to, why you might want to invest in it. So welcome to everybody. If you could hit that thumbs up, and if you're watching this in the future and not live, welcome. Please subscribe and come join us on the live stream whenever you can. So just a quick hi to whoever's in the stream. Who do we have? Annabelle is here in Spain, the Costa Blanca. ¿Cómo está? Steve Manton, Solihull, Paul Bagworth and Kenilworth. Robert Pates, of course, is here in Crete, from Crete. Colin Perry from the Peak District, some sun at last. Peter Vince and Leatherhead. Mike Powell here in Southampton. Alan Stratford in the sunny Malvern. Still have no idea what that is. And Mark Mason is here. Nice. Thanks for joining us. And don't forget, thank you to Kuflink for sponsoring the stream. Proud supporters of the stream. We appreciate them. Narendra over there doing a good job. Able to have a chat with him from time to time so we get an update on where the company is, and everything is looking hunky-dory over at Kuflink. So if you're not an investor with them, which I think most of the people in this stream are, but if you're watching this in the future, you can get up to $4,000 cash back on your first investment as a new investor. Terms and conditions apply. And your capital is at risk, so please be aware of that. Join.kuflink.com/financial-thing to sign up. Remember, none of this stream is guaranteed, is intended to be financial advice. It is all opinion based, and we just discuss investing, and that's what we do. FCA CEO letters to platforms. Yes, I did read a little bit of that, especially about the secondary market. Interesting. Steve Thomas is here in Macclesfield, and so again, if you have not seen the Crypto 101 article, let me just show that to you real quick, because it took me quite a while to write this, and I think it's got a lot of good information on there. Everything from where to buy and sell, all the different fees of the platforms. Let me zoom out just a little bit so you can see that. Hopefully that's showing up okay. Is that cut off? I don't know. Sometimes, there we go. And shows you about where you can buy in the UK, the USA, fees for the different platforms, what they charge. You know, you got to be careful if you're using credit cards and debit cards on some of these platforms, because they do have some pretty hefty fees. So it shows you which companies have the lowest fees. Also, if you know, to save fees, you want to do it with a bank transfer. Explains about external wallets, why you want to consider putting your crypto onto external wallets. Also about decentralized swap exchanges, and just general information about, you know, what cryptocurrency is, what the blockchain is, and all the myths about Bitcoin that I cover in there, and some of the rebuttals and things that I don't believe to be true are also listed in there. So here we go, Bitcoin myths and FUD. We call it FUD. Fear, uncertainty, and doubt that has spread a lot about cryptocurrency. All there right in the article. It's free, as always, as everything is. So let's get started. Oh, here we go. Hold on. Let's take a look at. Hang on one second. You just log in here to LoanPad and check out what's going on in their account. Everything is actually looks like they've retracted a little bit with their loan book, which is interesting. We've seen LoanPad really kind of move forward with their loans. I think 102 loans was their maximum, and now we are down to 99 loans, but the total amount of LoanPad loans is still 35.89 million pounds, with a total loan value of 76.1 million pounds. And that's the total value, and total security value of 86.1 million. Still a low LTV, loan to value ratio at 42%. If you're dealing with quality loans, that loan to value, obviously the lower number you can see is a better thing. If you're new to peer-to-peer lending, you always want to look at that loan to value. So basically means that the average loan book is 42% loan to value. In layman's terms, that means if the property value is worth 100,000, then the maximum being loaned on that would be 42,000. So if it was 100,000 value, 42% LTV would put the loan at 42,000. So the lower that number is, the better. And also very important to pay attention to here is liquidity, how much the estimated time to sell if you needed to exit. It's still less than a day. It's been that way ever since day one. So that is really good. Really good. The ICF is £24,819 of that. £40,000 committed fund amount has been spent. So again, we always keep an eye out on that. There's £15,000 left in that ICF. Not really too concerned about that because of LoanPad's loan book quality, but it is something to pay attention to. But in the grand scheme of their loan book, LoanPad is a very small interest coverage fund. Only one loan in there that is using that fund. Not really significant, but everything is really as is, except, you know, again, we've dropped this live loan number has come down from 102 to 99, but as LoanPad takes on new borrowers, they move loans in and out of this portfolio, so you will see this number vary up and down as it moves. So the FCA sent out a letter on May 25th to the CEOs of peer-to-peer lending companies, and one of the things that they've really wanted to pay attention to is these secondary markets. So what they've said is they want to make sure that secondary market loans on peer-to-peer lending platforms are actually priced fairly. You know, the pricing loans on a secondary market is tricky, because a lot of these peer-to-peer lending companies do allow pricing just to be the way it is on the market. So some peer-to-peer lending companies have, you know, ways for people to put increases on what they're selling, so to put a premium percentage on the sale amount or to discount. And a lot of times these peer-to-peer lending companies don't have any control over that secondary market, so the FCA is getting their little hands dirty saying, we are going to watch out now for these secondary markets. So that may result in some secondary markets being changed. It's a little bit up in the air as how that would exactly work, because we used to see some secondary markets where people could put up to a 99% discount. I think, was it Assets Capital, or one of the platforms, you were able to discount your loans a massive amount, and some of the platforms had caps on how much you could charge as a premium, but the FCA is cracking down on this, and we'll see what happens with that secondary market. Now, I don't think that secondary markets are really that active like they used to be when liquidity was, things on the secondary market, if you were a lending investor, would move very fast. You see some secondary markets that don't really have a lot for sale. For instance, Kuflink seems to be one of those. I don't know if that's because there's just nobody putting their loans up for sale, or if they're just getting snapped up very fast. It's hard to say. I don't monitor that secondary market much, but there just isn't that much on secondary markets nowadays like they used to be. There are companies like AbleRate that has their own way of pricing secondary markets, and it's more definitely more complicated. But the FCA is going to intervene. It says if if these companies don't do things the way that the FCA wants, then they will suspend. And it says right here, if a platform cannot comply with these requirements, then they must suspend the secondary market. So it's interesting. The FCA, I think, is nervous. They're nervous about the peer-to-peer lending sector in general because of what they've seen happen with the companies that have gone out of business. So they are going to play a watchful eye on what's going on with these peer-to-peer lending companies, and I think this is just the start. And it also says, our recent supervisory work leaves us generally dissatisfied with the wind down plans that we have reviewed. So every peer-to-peer lending company to be authorized by the FCA has to have a wind down plan in case the peer-to-peer lending companies go out of business or into administration. The FCA is saying they do not like, in general, the wind down plans that they have looked at. It says all had assumed a voluntary wind down, and none had adequately identified the triggers that might realistically allow for a solvent wind down to be invoked. Additionally, where a firm's surplus liquid resources are forecast to be lower than the total net cost of the wind down, you should rectify this immediately and provide evidence of how you have done so. I actually agree with the FCA. I think a lot of wind down plans don't really account for things like how much it's going to cost, how they could do that solvently without going how they could do that without going insolvent. And they were given 3 weeks starting the 25th of May 2021. The peer-to-peer lending companies were given to confirm to the FCA the amount of money that has been ring-fenced to adequately fund a wind down and an explanation of why this amount is appropriate. So I think, yeah, that's a really good thing for the FCA to look at. I think that's an important thing. We've seen several companies go into administration now, and there should be documentation on how those administrations would be paid for, rather than leaving it up in the air, as investors have found out the hard way with those companies that have gone into administration. Let's see what else. LendInvest speeds up buy-to-lending with new software solution. Incidentally, I don't know, but if you hadn't seen that, LendInvest did float on the stock market about a month ago. And I was looking at the share price, and I don't think you could see this, but on the screen they're at 229.12, and they floated a little bit less than 200. So it's gone up quite a bit, 16% year to date. It's not something I personally invest in, shares in LendInvest. I don't buy shares in peer-to-peer or alternative finance companies. I think it's quite risky, but the shares have done well, up 16% so far. I think LendInvest is quite innovative when it comes to what they do within their company. And now they have an integration with a software provider to speed up buy-to-let lending. Anything you can do to make things easier on the loan sign is a good thing. So LendInvest is one of those companies that takes that very seriously because they want to be at the forefront of lending. And they continue to really move forward with their loan portfolio too. I think it's one of those companies that strictly is obviously not peer-to-peer lending. They did apply to be a peer-to-peer lending authorized company at one point, but they withdrew that application several years ago. And they are not strictly peer-to-peer lending because you are not direct lending your money as an investor contractually to the borrower. LendInvest takes care of that. But it is a company that I think is doing well. And I think they've got a valuation now of about 255, maybe 300 million pounds. So their stock market float has done pretty well. So we've had a couple of mini bond providers that have been shut down after they were found to be misleading investors and accepting money after they were insolvent. And I've always said this: if you're somebody that looks for a place to get yield, which I know a lot of people are nowadays because of low interest rates, watch out for mini bonds. They are very, very risky. Property mini bonds, I just say take away. Just be very careful. I don't like investing in them myself. I wouldn't put a pound of my own money into a mini bond. But 4 of these mini bond providers have been shut down and been given a slap on the wrist by the FCA. The Magna Group of companies is one of them. And they've been marketing mini bonds that were misleading. And they've duped a lot of investors. It's pretty sad. And some of the directors have paid themselves quite a big sum of money. It said in this article it was found that 2 of the mini bond providers took over £2 million from loan note creditors between the 1st of December and the 25th of February 2020. And when the directors ought to have known that all of the companies were insolvent, the directors paid themselves £425,000 and a further £370,000 lent to a non-UK company of which they were shareholders. Obviously fraudulent stuff going on. Be very, very careful out there of mini bonds. And in other bond news, the London Capital of Financial bondholders withdrew their judicial review of appeal because they could not afford to pay for the legal fees if they were to lose, which were going to be about 600,000. They would be suing obviously the FSCS to try to get money repaid for the London Capital Financial bondholder collapse, but they have decided, since they lost the first time, that they would not be appealing because they do not want to have to pay that money, nor would they be able to if they were to lose. The first court battle, the FSCS withdrew their right to go after legal fees if they won the case. So they kind of gave them a freebie, these bondholders, with the first court appearance, but for the appeal, the FSCS has said no, they won't. They won't not allow those court fees to be chased after if the FSCS wins again, and they would go after those legal fees of 600 grand. This is the problem with the legal process. If you lose, you have to pay the winning party's legal fees in most cases. So yes, that was it. So let's take a look at the Trading 212 portfolio. Let me grab a drink of water. I'm a little tongue-tied tonight. I don't know why. I'm just dry throat. No COVID, but dry throat. So again, most of the portfolio is sitting in cash at the moment, £8,539, sitting on the sidelines, sort of waiting for an opportunity. I almost pulled the trigger on some more Laredo shares. I think maybe the screen is a little bit off on, maybe you can't see this left side, but you can see right here is Laredo. And over the last month, we have seen more of a decline from 58 US dollars all the way down into the 30s right here. And this is where I was thinking about, going for broke with these Laredo shares, but I just emotionally could not get enough cojones to pull the trigger at this point. And now we've seen this bounce back almost 10%, down from its low point of 37 back up to 46. But I'm just not convinced that these markets are very stable at the moment yet. Sort of waiting to see what happens. I know we're going to get some unemployment numbers today that are probably not going to look very good. I think the market's under some pressure right now. The true state of the economy in the US is really starting to come out, and I think maybe turbulent times are ahead in the stock market. Again, no crystal ball, no guarantee, just more of a gut feeling from looking at the economic numbers. I know things are a little bit different in the UK with inflation, but I always use the US as a barometer of kind of what happens to the stock market when the US markets stumble and topple. Then it tends to have that domino effect on, other first world markets like the UK. You can see down here, I know it's a little bit off stream, but Lloyd's has lost about 10%. We were up about 84%, down to about 74% now in the gains. You can see up here we're at 47p, now down to 44. So it's been retracting just a little bit, but we're going to hold on to those for now. These other shares not doing very well. Microvision down 34%. Olin just up a little bit, 3%, and then the Tullow Oil down 18%. But again, looking for really opportunities, I think, within the energy sector. If I see that the oil starts to stabilize and then sort of goes on that upwards pattern, most of this cash will get deployed into stocks at that point, but sort of sitting on cash in the sidelines right now to see how things are going. But it's been a funny week, especially watching what's going on with the economy. And I don't know if the unemployment numbers, let's see if the unemployment numbers came out today in the US. Employment numbers, because I had a feeling we were going to see some pretty bad numbers today. I don't know if it's today. And I don't always believe what I read too in some of these news stories, because sometimes they can word it in a very interesting way to make it look like the employment numbers are actually positive when they're not. Yeah, we haven't seen those numbers yet. I don't know if they didn't come out yet, but I think there's going to be some bad numbers this week. And what tends to be happening in the stock market is when we get these bad economic numbers, the markets seem to go higher. The reason being is that the U.S. government is not going to pull the plug on this money printing debacle when the economic numbers are really bad and when the inflation numbers are rising. So the market is kind of polar opposite to what you would normally expect. If the U.S. unemployment numbers, or just in any country, were bad, you would expect the stock market to go into the red, but that's just not happening at the moment. It's a very, very odd situation that we're not really seeing for a long time. Let's take a look at some of your comments here, and then we'll take a look at the crypto markets. Oh, and of course, we're going to get to the Kuflink accounts too. I totally forgot about that. Oh, Darren is here. Welcome. Yeah. Let's see. You've never used your secondary market. I don't know who George is. Yeah, that's a good point. Let's see. Richard said, what investments are a realistic additional investment to diversification within similar peer-to-peer yield? NCYF fund or a decent alternative? I think if you wanted to get yield similar to peer-to-peer lending, well, it depends. I mean, some of the peer-to-peer lending yields are in the 3%. But you could go for dividend stocks. You know, you get a portfolio of high-paying dividend stocks, but obviously you're going to be risking that if the markets do retract, then the stock price will obviously retract too in most cases. So there is that risk with any type of equity. It's difficult getting yield unless you go for a dividend. Personally, I think the better way to do it is diversify into things like some cryptocurrency, and then just take the gains if you're a long-term holder on that. I think is going to give you a much better yield. You're going to get that growth. I've always kind of been a growth stock person rather than a yield person with dividends as far as stocks go. But you can go that route. I think diversify, grab yourself some crypto, some Bitcoin, some Ethereum, and do your peer-to-peer too, which you just don't want to be exposed too much in any one sector, because if one sector goes bad, then obviously your risk goes up. So I think it's good to have, you know, some index trackers. If you want to add some stocks in there as far as high dividend paying stocks, you can do that. It's hard trying to pick them out. That's again is the issue. You're not really sure which ones are going to do well in the long run, which ones are going to underperform, overperform. I mean, I'll give you an example. KMI, Kinder Morgan, has been one that I've been quite bullish on, but it just hasn't really performed recently, and that's a high-paying dividend yield stock. It's KMI as the ticker on that. So do some peer-to-peer, do some crypto, do some index trackers, and then, you know, just be balanced. And if you can, obviously, if you can afford to do some real estate, obviously rental properties are good when it comes to yield. I think the rental property situation is very stable right now. The housing market is buoyant. People are always going to need a place to live, but you do have pros and cons with every single one of those types of investment. Obviously, we're at a kind of a top right now, I feel, with the stock market. So buying stocks at the moment seems difficult for most people. They just don't want to put money into the markets when they're like this. They feel at the very high end. You know, we're at record highs right now, even though I don't think that the market's going to collapse necessarily anytime soon. It's just hard emotionally when you're at record highs and you see what's going on with the economy. How do you pour money into the stock market? But that's what I would do. Dave Dawson is here. Nice to meet you. Nice to see you. Who is George? Any opinions on the whiskey exchange, Richard? You know, honestly, I don't really know much about whiskey. It sounds speculative to me. Yeah, I don't know. I don't really know much about whiskey. MSM Lie. Are you sure, Lawrence? MSM Lie. MSM Lie. What does that mean, MSM? Fed expecting to taper QE next month. I don't think that's going to happen. I just can't see it. I don't see it because the Fed, if they start tapering, the markets are just going to tank. And I don't think the Fed right now, with what's going on with COVID, they're just not going to let that happen. And they're going to keep propping up crude oil. What, if any, problems do you see Afghanistan causing the stock markets? I think that's just the oil play again. Protection of the oil. They're going to keep the crude oil prices high. I don't necessarily think it's going to have any real impact on the US markets or on the UK markets, but hard to say. Anyway, let's take a look at the Kuflink accounts. I got them pulled up in front of me, and I know these are late. Hopefully you can see this. This is the annual report financial statements for the year ending 30th of June 2020. I do not know. Can you see that yet? I don't know if these are posted up on Company's House yet. But yeah, I mean the accounts look pretty good. They've been audited. See what they said. Contingency planning. I'll show you some of the most important things. So results, the company made a profit before tax of £136,000 for the year. So they are in the black. Again, not a huge amount in the black, but again, you have to remember this is accounts ending the 30th of June 2020, which was a bad year for peer-to-peer lending. So the fact they're in the black during that period of when COVID really started to affect the UK is actually a really good thing. I think they've done well. Let's see what else. Raising capital. The existing shareholders of the parent company Kuflink have been significant peer-to-peer lenders since 2019. Since that date, they have invested £4.63 million of equity into Kuflink, demonstrating their commitment to the group and its strategy. £2.9 million was invested by existing shareholders in December of 2019. A further £800,000 was invested from between June to September of 2020. So quite a lot of capital that they have been investing as owners. And let's see what else. Loan book origination as of the 5th of July 2021. Loan pipeline has more than 23 million pounds ready to complete with solicitors, and a further 31 million pounds of loan are at an inquiry stage, of which 15 million have been instructed for valuations, and the possibility that some will turn into new originations. We can confirm that our loan book has broken the 60 million pound barrier on the 30th of June 2021. They predict an increase in new business of loan originations going forward. Let's see, ongoing concerns. Let's see here. It says they're going to be cutting back on their marketing, so to save expenses, because now they have a good amount of brand awareness. So there is that. Now there was the auditor MHA McIntyre Hudson has audited the company. This is signed. This report signed and approved the 23rd of August 2021. This is the independent auditor's report. And let's see what they say. Okay, matters on which we are required to report by exception. Okay, so they've said that the information given in the director's report and the strategic report for the financial year are prepared and they're consistent with the financial statements, and the director's report and strategic report has been prepared in accordance with applicable legal requirement. So there are a couple of things on here. In light of our knowledge and understanding of the company and its environment obtained in the course of the audit, we have not identified material misstatements in the director's report and the strategic report. We have nothing to report in respect to the following matters in relation to which the Companies Act requires to report. In our opinion, adequate accounting records have not been kept, or returns adequate for our audit have not been received from branches. So they're saying they have nothing to report in these areas, so that's actually a good thing. So the financial statements are in agreement with the accounting records, and disclosures have been made, and they have received all of the information and explanations required for the audit. Let's go to the conclusion. Where is the conclusion? Hang on. Oh, here we go. Conclusions related to going concern. In auditing the financial statements, we have concluded that the director's use of the going concern basis of accounting in preparation of the financial statements is appropriate. Based on the work we have performed, we have not identified any material uncertainties relating to events or conditions that may cast doubt on the company's ability to continue as a going concern for a period of at least 12 months from when the financial statements were authorized for issue. So again, the auditors have looked at this and said the company there's nothing of concern in their accounts or statements for the next 12 months of operations. So basically they are going forward as they have been in a positive way, and now it'd be nice obviously to see this profit amount turning around, and I think you will see when we get the next accounts. If I could hazard a guess as to what these numbers are going to be, it's going to be better. But you can see there was a total comprehensive loss of 2019 of £455,000. That the total comprehensive profit and loss for the year is 2020 is 239,607 in the black. So we've gone from being in the red 455 to in the black 239. That's obviously before expenses, and they still have some, obviously some losses going. While they were growing, there has been some losses that have been taken, but they're starting to really chip away at those numbers. They got some cash in the bank, and let's see what else. I think in general the accounts look okay, and they're well funded. So when we're looking at peer-to-peer lending companies, we want to make sure that they have enough cash to continue operating in the right direction and make sure that they're solvent. I think Kuflink is one of those companies. So the accounts look pretty good so far from what I can see from these numbers. And I think you're going to see these numbers will be a lot better for the next round of accounts coming out of that period of 2020 that obviously COVID was a big problem. So I'm sure these accounts are either up on Companies House now, or they will be very soon. You can see here, right here, where I don't know if you can see my mouse here, profit loss on ordinary activities before taxation, £136,304 in the black versus £455,521,000 in the red in 2019. That's the operating profit and loss. And you can see here up here the gross profit of £822,637 in 2020, which is about 250,000 more than in 2019. But obviously they've cut their administration expenses too. You can see 2019 they had over £1 million of administration expenses, which they've cut to 686,000 in 2020. So cutting expenses, increasing profit. It's a good place to be for Kuflink. So we'll see on the next accounts how that plays out for them. Let's take a look at what's going on in the cryptocurrency space right now. We have had a good... here we go. Let me try to move this. Can I move this? I have to get my screen set up better for next week. But up here you can see the first one that I'm highlighting here is Bitcoin. We've had about a 4.5% retracement in the red to 46,917 pound. We're at an 880 billion US dollar market cap. Bitcoin has really done well over the last month, and I think it's going to continue to do well. And the reason is there's just too much stuff going on at the moment that there's just so many good things going on within the Bitcoin space. You have all these ETFs that have been filed, and this was an interesting document. It showed the very first ETF, exchange traded fund, that was applied through the US SEC was back in 2013. It was actually the Winklevoss twins, who are the famous Facebook twins, but they had applied back in 2013 and actually denied for an ETF. It took them 5 years for the denial, I believe, which is crazy. But you can also see here the Bitcoin Investment Trust through Grayscale in 2016, which now that fund actually exists. But there's just so many things going on in the cryptocurrency space right now, which is going to really pump Bitcoin's price further. You can see all of these ETF applications at the bottom right here. Now we've got VanEck. ARK is going to get into this space, I believe. We've got Pro Funds. We've got what else? Morgan Creek, Galaxy Digital, and Invesco. One of the huge names, Invesco and ProShares too, which were applied for in August of this year. And those are going to be waiting approval. And I just think it's a matter of time before these ETFs hit the markets. Now, they are futures and derivatives based, which really might not have as much of an effect on the Bitcoin price. But you also have these companies up here that are actually coin based, which is what you want to see with an ETF. That's actually where they buy the actual coins. So you've got Global X up here, which is an ETF filing, and ARK, which I know many of you are familiar with ARK, and that's awaiting approval. I think you're going to see probably by the end of this year, if not early next year, that some of these ETFs starting to get approved. VanEck, you've got an Ethereum-based ETF, so you got that going on. We've got the September release in El Salvador of cryptocurrency of Bitcoin becoming legal tender, where they're going to have a couple of hundred ATM machines, and they're going to give the people free Bitcoin who sign up for a wallet. So you've got that. You just have 11% of young Americans have invested their stimulus checks into cryptocurrency. There's a lot of adoption now. It's really the snowball, and we're still very, very early on in cryptocurrency and in that investing. But you can see here, 1 in 10 American citizens aged between 18 to 34 have invested part of their COVID stimulus checks into cryptocurrency assets. No surprise there. Young people love cryptocurrency. It's something that they understand. They would much rather buy it than gold. Up here we have asset managers and companies have accumulated 1.2 million Bitcoin worth $57 billion. So asset managers are now, this is institution, have accumulated 4% of Bitcoin supply, and private and public companies have amassed 1% each. And it's really important to know that, when we talk about Bitcoin supply, there's just not that much Bitcoin out there. There are 18.8 million coins that have already been mined. And I think probably in the region of 80% of those are just unavailable. They're either stored in wallets that are not on markets for sale, or they've been lost. So this supply is just going to it's going to increase up to 21 million total, but most of the Bitcoins in circulation are just not available. So that scarcity eventually is going to really push that price up. And we're still very early. People say it's 46,000. It's just too, the price is just too high, right? I can't envision coming in to the market at that type of price. But, if you think about where Bitcoin was, we were at almost a $64,000 price, right? Now we are down in the 46,000. So you're essentially getting at about an $18,000 discount if you do decide you want to, get into Bitcoin. You can see here, this is the top up here of 64,000. It looks like a top of a mountain. Right now we came down to 29,000, and now we're at 46,000. I don't think you're going to see prices below 30,000 again now at this point. And it's a great opportunity, I think, still now at this point. Not to say you won't see some obvious volatility where this price might go into the 42,000, 41,000 range, but I think from here is, the rest of the year, you're just going to see this tracement up as cryptocurrency in general just gets more and more out into the masses. And we saw Visa this year buying a CryptoPunk actually this month. For $150,000, they paid for a little digital character that looks like this, which is crazy. 150 grand And that obviously not Bitcoin, but it's still a cryptocurrency play of an NFT based through Ethereum, becoming more and more mainstream. These asset managers coming in. We got PayPal launched its crypto service in the UK this week, I believe. So now people in the UK can buy, hold, and sell digital currencies. I don't recommend PayPal because you can't withdraw the wallets. You can't withdraw the coins into your own wallet, which means you really don't own the cryptocurrencies. But again, this is going to bring exposure to Bitcoin to the whole of the UK market, and this is going to happen in the US soon. So I mean, you're talking about almost 500 million people that will be exposed to PayPal and their Bitcoin launch. And then we have Coinbase, which now has been approved to purchase $500 million worth of crypto to hold on its balance sheet. And again, this is going to be something you're going to see more and more. But companies, they don't want to hold cash anymore because cash is getting deflated in value all the time because of inflation. And I think the companies are starting to realize they can put a portion of their cash into things like Bitcoin or hold it on their balance sheet like Tesla or SpaceX has done. And this is going to become more common. And this is a case of Coinbase putting their money where their mouth is. They're going to put $500 million of crypto onto its balance sheet and then also invest 10% of all future profits into cryptocurrency. I think that's going to be something that you see more and more as time goes on. And we saw this week a story of Binance blacklisted by the city Watchdog. The FCA warns crypto exchange poses a significant risk to British investors. Now, one thing to clarify, this is the UK arm of Binance. This is not Binance.com, which is the site that everybody uses to buy their cryptocurrency anyway. It's kind of, this is what we call FUD news, designed to really scare people. I think Binance is definitely having their problems with the FCA, which I think they will get sorted out. But this is why I suggest hold some of your cryptocurrency on an offline wallet, just in case something does happen to one of these platforms, which is possible. We've seen it in peer-to-peer lending with companies going under, going into administration. There's always a possibility of that happening. So if you can control your own cryptocurrency, it's a good way. Just put it on an external wallet, put it in a safe, put your seed keys and your passwords in a safe place, and then sit on it and forget about it. So a lot of good things happening. This is why I think that Bitcoin is going to continue to price higher. I would not be surprised to see six figures by the end of the year. There's some saying 200,000. I think realistically, if we were to hit 80 to 100,000 by the end of 2021, that would be a very, very realistic place for Bitcoin to trace up to and continue. I think once we get over the point of 64,000, which was the previous high, you're just going to see Bitcoin start to take off. It's just becoming too big at this point where for it not to happen. So that's what I got for you this week. I'll take a quick look at your comments. Oh, MSM, mainstream media. Yes, mainstream media does lie. For sure. Yeah, Mike says REITs are probably the safest for a decent yield. Yeah, REITs are real estate investment trusts. You can get some good yields on REITs. I think the retail commercial property is going to have some problems in the next year or two. So buying REITs and things like apartment buildings. I think the office space has changed because of COVID, and a lot of companies are seeing that they don't need people to work from expensive office places to succeed. There's a lot of work from home that will continue, so got to be careful with the REITs. Make sure you understand what the REITs are holding. Dave said one alternative is the renewable energies fund that have opened up in the last few years. Those are higher paying dividend funds that you can get some good yields from. FCA having a pop at Binance declaring that it's not capable of supervision by regulators. Yeah, it's going to pop. FCA is going to pop at Binance. They've been popping at them for a while. We'll see what happens. Yeah, Robert makes a really good point. If you are a Coinbase investor, if you go onto your account, there is a rewards section at the bottom. And they do this thing called airdrops, and they'll give you some free cryptocurrency for watching a video and answering a question. They're multiple choice, they're not hard questions, but it's a way for you to get some extra money. And one of the coins that I got a couple of years ago, I think they gave me a few pounds, five pounds worth, and now I looked on yesterday, it was worth about 50. So they actually are giving you free money through the rewards, and what they do is they airdrop new coins every once in a while. So if they're listing a new coin on Coinbase, they want to bring attention to it, they get that company to agree to giving away free coins, and if you can get in there quickly enough, you can just answer the questions, watch the video, and you'll get yourself an airdrop of free coins. Sometimes it ranges from, you know, £3 up to 9 or 10 pounds worth of coins. Whiskey, don't invest, ingest. Yeah, Mike's right. That supervisory note is from back in May, but it's been published now. Yeah, Mike, on the balance sheet, those losses were posted from previous years' totals. So I think it was a cumulative loss. Yeah, you'll be able to look at the accounts, Kuflink's accounts on Company's House soon. The Winklevoss. Hey Brian and Woburn, how are you? Lawrence, how about a top 5 Bitcoin, top 5 Bitcoins, like top 5 peer-to-peer? There's no top 5 Bitcoins. There's top 5 coins that I like, top 5 cryptocurrencies, but I definitely think that Bitcoin is by far the safest coin out there, and the rest of them are just more speculative. I think Ethereum is good because there's just so many companies using Ethereum now for NFTs, for smart contracts and stuff like that. So Ethereum has a massive use case, and I like what else? Chainlink, I think, is a good project. The rest of them are just so speculative, but if you go to the Where I Invest page on financialthing.com, you're going to see the coins that I hold, but I think about 85% of all the cryptocurrency I hold is in Ethereum and Bitcoin. See if I can zoom in. Yeah, so here's, you can see here Bitcoin. These are all the different coins I hold. I like Solana. I think Solana has the potential of being a big competitor for Ethereum just because of the cost of Ethereum. It's very expensive to make Ethereum transactions right now. That will be hopefully solved when they release Ethereum 2.0, which will go away from mining, proof of work, and it's going to be changed to proof of stake when they release Ethereum 2.0, which should hopefully take care of some of the costs of what it used. Ethereum is just expensive. So a lot of people are betting on these payment coins like Solana, Cardano, Polygon, and what else? Polkadot. That's what a lot of people are betting on, that they're going to take on Ethereum. But the thing about Ethereum is that they just have the brand name and the network effect of everybody knows Ethereum, and a lot of people are wondering whether Cardano is going to be able to overtake Ethereum as a payment processor that's very cost effective. And so far we don't know, because Cardano is not really operational. They plan to be by the end of the year. But I do like Solana a lot. If I were redoing this portfolio, I'd probably be heavy into Solana and heavy into Bitcoin, Ethereum, Chainlink I own, and then small pieces of these ones at the bottom. But top 5, I would say Bitcoin, Ethereum, Chainlink, Solana, and the 5th one, I would gamble that BNB, Binance's coin, because they're using that coin to make transactions. So obviously Binance is the biggest crypto exchange in the world. You get a 25% discount for using Binance coin for your transactions. So I think Binance, the Binance coin will do well in the long term. It's very expensive right now. It went over $500 per coin, but let's see what it is right now. It's the 4th largest coin right here at $476 with an $80 billion market cap. So it's an expensive coin, but it's up 11%. So yeah, that would be my top 5. But yeah, check out Solana. I think Solana is a good coin, but it is speculative. A lot of these altcoins they're just, you're betting on a startup business. So how about a session on NFTs? Yeah, NFTs are just so speculative. Again, it's like throwing a dart blind and trying to figure out what's going to hit and what's going to be popular. You don't know. So I don't really invest in NFTs. I own one NFT, but you just don't know which ones are going to go up in value and which are going to stay put. Alan, where can we get a copy of Kuflink's accounts? Go to Company's House and set up an alert in there, and when it gets posted, if it's not already posted, then you'll get an alert, and Company's House will send you an email and let you know when the accounts are posted. Okay, I think that's going to wrap it up this week. Appreciate everybody joining us, and we'll see you next Thursday. I think, do we have a guest next Thursday? I think we may have a guest. Let me check the calendar. So I know we have, I don't know if it's next Thursday or not. We have Andrew Holgate, was one of the co-founders of Assets Capital, but I can't honestly remember if he's coming next. I think he's maybe on the 19th. Let's see here. I'm so not organized today. There we go. 16th of September, we'll have Andrew Holgate live on the stream. It'll be interesting to pick his brain about peer-to-peer lending, kind of get his view on where the sector is going. And then hopefully we'll have Louis from LoanPad coming up here in the next 4 to 6 weeks. So I hope you enjoyed the stream. And please subscribe, leave a comment down below if you have other questions. And have a great week. Enjoy your weekend. Stay safe out there. And I will see you next time. Good night, everybody.